Good afternoon, everybody, and welcome to another edition of ChartWatch Live. My name is Capolingua, and it is such a pleasure to be joining you to talk about markets Wednesday at lunchtime. And there is so much to talk about. Before we get into that, of course, we'll discuss our portfolio management model, the risk bucket. How full is your risk bucket, ladies and gentlemen, at the moment? And there's definitely stuff going on in the markets that would suggest maybe we're not going, full throttle at this point in time. And then, of course, we'll get to your requests, and we're going to talk about any ASX stock you'd like to talk about, and I'll give you my best technical read up on that. Let's head first and foremost over to our portfolio management model. I do like to start in the USA because at the end of the day, hey, if they get the sniffle, we get the cold. So this for me is a little bit of a heads up of what might be down the track for Aussie shares. And, all I want to know is green light, amber light, red light here. But hey, if you are managing a US portfolio, that is part of your overall capital sits in a bucket that has US risk, then this is where this becomes really relevant because it tells us how much we can fill that bucket. And look, we're half-half. That's what I write about in my ChartWatch Markets articles. And based upon the technicals, we can see short-term uptrend. We can see a really steady group of demand-side candles. They're the ones with the white bodies, and the only way you can get a white-bodied candle is if there was excess demand at some point during that trading session. Excess demand, more often than not, the price tends to go up. Of course, we will put that in with our trend, short-term trend up, long-term trend up, our price action, rising peaks and rising troughs, and so on. And the technical picture actually looks pretty decent here. I'm going to say half decent, as in that's why we're half-half on our portfolio risk bucket. What do I want to see to move to a higher risk setting here, and potentially more broadly, therefore giving us a bit more of a green light for Aussie shares? Not far away. I think that candle's important. That's where we're starting to see some of the supply manifest itself that I feel sits between these two major points of supply, one here at 23,570 and one at 24,020. And we've talked many times in these sessions why there tends to be a supply overhang at those previous points of supply, which in this case has become a zone of supply. And there's nothing better than these candles at telling us where that supply is starting to kick in. We can see the black bodies coming in here, but a decent response last night. So the way for this market to go up, we need to deal with that supply. We need to consume that supply. That supply has shares. They want cash. Well, the demand side, guess what they've got? They've got cash, don't they? So we're counting on the demand side, giving their cash to the supply side and kicking them out of the market, and therefore freeing the path for a move higher. It hasn't happened yet. I pointed to that candle before. The high of that candle is 23,698. Let's call it 23,700. A close above that, a strong close, emphatic close on the high of the trading session, ideally with some volume to tell us we're interacting with the supply. It's one thing to be up there and in that range, but if we have elevated volume, it tells us that there's lots of demand. Well, there's elevated volume. Volume is buying and selling, so elevated volume is lots of demand. But we're also removing the supply, which we expect in that range as well. A little ways off. In the meantime, look, I think I'm still happy at half, but certainly leaning towards moving back to a higher risk setting. And then we get to Australia, the old tin pot, ladies and gentlemen. A few people that we do get emails during the week saying, what is this old tin pot Carl keeps talking about? It is the S&P ASX 200, 4 big banks, 3 resource companies, Telstra, Wesfarmers and CSL. Welcome to Australia, ladies and gentlemen. That's about 98% of our market capitalisation. And it looks starkly different from what's going on in the USA. And if you've been following my analysis on market index in my articles, ChartWatch articles, I've been saying I'm only a 1/3 risk setting here. That is my risk bucket, the amount of capital I can personally allocate to ASX shares. The bucket's only 1/3 full. That means it's 2/3 in cash right now. It's been that way for quite some time. It started to move to cash quite early, around here, or here, I can't remember which candle, but you can see the candles obviously telling me supply's coming to the system, causing me to manage my risk. And I think we went to maybe a half hour around here, and then to a third around here. And we've been that way ever since. And I still think we need to be there, because can you put your hand on your heart and tell me honestly and confidently that the demand side is in total and utter, unequivocal, unchallenged control of the old tin pot's price? And I don't think you can, because look at the candles, they're a bit sideways. There's a few more black and whites in there. We're getting a bit stuck, aren't we? We've actually got a little lower peak in here. My trend ribbons, well, for number one, the short term is down. The long-term trend, it can't decide. It's neutral. These are not great signals that the demand side's in control. So I think, therefore, a bit of caution is required. And it's through this lens, ladies and gentlemen, this lens of portfolio management that sits overarching over the top of, for me, everything I do, that we look to your requests for today. So we're going to head over to CSL first and foremost. I've got an offline request here from Rose, who asked me it was quite a broad question, to walk through the CSL chart. Now, what we could spend all day walking through the chart. So I'm just going to cherry pick some of the items, and you can see we've actually kind of done that before, because I save all of these drawings, markings to our chart, so next time we come back, we'll see what I said last time. So look, let me just go back. Let's talk just quickly about the transition from uptrend to downtrend. So I think this is relevant for everybody. We're starting to see it now potentially in the ASX 200. And we've all had this feeling, of course, of a stock going gangbusters. And the big question is, well, when do I sell? Now, I don't like this word sell. Okay, I think it's too finite. I think it's a total ultimatum. I like this idea of reducing risk. I never just sell all my shares at once. Actually, that's not true. It could happen if the candle is big enough. Hey, we better start talking about some of these things. My point is, if I start to see the fingerprints of supply in the market, I will naturally, therefore, start to reduce some of the risk that I'm holding on a particular stock, until the point where I'm just so convinced the supply side's in control, it makes no sense to continue to hold. Now, compare and contrast that, I guess, to many fund managers out there that will hold, hand on heart, hold, no, it's great value, it's great value, it's great value, until maybe it's too late and the market's already told them it's not, and many investors behave in the same way. Okay, so I have rules. The good news is you can learn my rules and you can do this too. First thing we're going to do is start over here and see, look, where would we have roughly gotten out of CSL? Because, over here, it was still looking pretty good. Short-term uptrend, long-term uptrend, let's say where that blue line is, okay? That's today. We don't know what's going to happen next. And just like in real life, the next candle will come and we'll need to make a decision. But right there, it looks pretty good. We're holding on to CSL. Everybody's told us to buy it because literally at that time, it was a unanimous buy among the big research houses. Okay, what do we do next? Well, we simply wait and we see. And that's what my model does. It's a technical model. It's a trend-following model. I can't do anything until the trend changes, or I get signs that it might be changing. Now, look at that candle. If you've been following me for long enough, you know that's not a great candle for this uptrend. You know that is one of the trademark fingerprints of supply coming into the market there around about 313, 314, because it's got that telltale upward shadow that, as we've said many times, points to where there is excess supply in the market. And that's because the market tried to rally during the day. That's the way that the shadow forms. It forms because the price was up there, but it couldn't stay there. Now, why couldn't it stay there? Well, because there's some supply, excess supply lurking up in that range. Oh, that's it. We better sell all our CSL shares. No, I'm out. I'm gone. I've seen one candle that I don't like. Off I go. No, that's silly. Because what we need to do is compare and contrast the magnitude, the order of magnitude of the excess supply that is in that candle with the order of magnitude of what's come before it, which is still a clear-cut environment of excess demand. Oh, but Carl, that was the top. I mean, you showed me the rest of the chart. I know that's the top. Okay, well, we didn't know that at the time. We can't see the future. So what do we do on that day? Absolutely nothing. And you'll often see me put 3 letters on the screen. FRP, exclamation mark, stands for full risk position. So that just means whatever risk I had on CSL at the time, let's say I had 1,000 shares. Okay, I'm allowed to hold it. You might also see me write something like equals R, because I also like to talk, I actually prefer to talk, I think, in this idea of, well, I've only got 3 decisions to make on a day. Am I going to add risk to what I've got? Am I going to keep what I've got? Or am I going to reduce the risk of what I've got? So plus R equals R minus R. And on that day, we're at equals R, even though we now know that's the absolute top. We should have got out of everything. Oh, okay, I won't ask for the emojis here. But again, look, hey, I didn't make this stuff up, but I've learned to interpret it. That we can clearly see the supply that was in the system yesterday is getting more motivated. How do we know it's more motivated? Well, they've pushed the price down, and so there's a little gap there as well. So quite suddenly, the market's view of what CSL is worth has actually shifted, and we should take note of that. Now, is that a minus hard day? And a lot of people there They've learnt the model. I'm out of here. I'm going to sell everything. And again, I don't agree with you, because I still think that's a really drastic measure. Yes, there's some supply coming into the market, but we know that there are ebbs and flows in any trend. And what we don't want to do is get out of our position too early. We certainly don't want this to go up to $400, and we got out on that candle. But there are some other tools we can use within the model to help measure when we really need to do something, or when we can actually just sit back and not worry about it just yet. And I think that's the camp we're in. So let's use some of these other tools. We've got price action. And price action, I'm just drawing in using my higher highs and higher lows for the uptrend, and lower highs and lower lows for the downtrend. Okay, so we'll do more and more of this during the session. If you're new to this, don't panic. We'll do more of this and we'll get the hang of this. Okay. Well, I can actually see here, now that I've drawn that in, I couldn't really tell before, but I can see that today's candle, and we're assuming that's today. Is it today? Of course it's not today. What is it? That's the 25th of July 2024. If you're holding CSL shares right now, don't you wish you could get in a time machine and go back to that day where you could have actually done exactly what we're doing right now? I think we've closed beneath that point of demand. So this is a point in the past where there was excess demand in the market. Why was excess demand in the market? Hey, people love CSL for whatever reason. We're banking, our idea of holding this is really based upon this idea that the demand side's got our back, that there's still excess demand in the system. Now, the demand that was in the market buying there, if we've got this black candle, this gap candle, close on the absolute low, upward pointing shadow, telling you that we actually tried to bounce. We tried to rally into yesterday's range, and all we found was excess supply. This is a really powerful candle. And it's closed beneath that point of demand, which, hey, there was demand there last time. Where are they? Where have they gone? I don't know where they've gone, but I don't like the sound of that. And that's the extent of all I need to know, because I can't go out there and survey every fund manager, can I? But I don't need to, because effectively the chart is the survey of what every fund manager is doing or is capable of doing. So look, I think now that I've drawn that in, and the combination of these two candles and the closing beneath that point of demand, and I don't want to sound like Harry Hindsight here, because we all know what's going to happen next, but this is about whether you could make an objective call on that day as to whether to reduce risk. Remember we said that, okay, let's pretend we've got 1,000 shares. And if you're unsure, it could be as little as this. And maybe that's all we're talking about, but it is taking a step to acknowledge what is happening in the market. It might be 50 shares, but it's taking that step. And this is the most important thing I'm going to tell you today, ladies and gentlemen. Taking that step will mean a whole lot more down the track. Okay, just hold that thought for a second. Okay, so for me, pardon me, I think the severity of that candle, it's a minus R, but it is certainly not a wholesale sell-off. And if you said to me, Carl, I don't even want to do anything on that day, I'm not too fussed about it, I'd say fine. I totally agree with you. Notice we're on a daily chart. I'm a short-term trader. I prefer to get my risk somewhere else where it's going to be better used. That is my trading style, ladies and gentlemen. And if it doesn't suit you and it doesn't match with you, go and find a trading style that does. I just happen to be here and teaching you my style, okay? Some people are going to say, Carl, that's way too short term. Why would I sell my CSL shares? I've got capital gains tax. Okay, that's fine. Maybe this model isn't for you. I would suggest for you lot, however, if you went to a weekly chart, and it's not going to match up because I have to scroll back, we were there. So you wouldn't have seen any of this happening on the weekly chart, but some people like that. Some people like this idea that it's a bit delayed, it keeps them in longer. Let's go back to the daily chart. You actually wouldn't have seen this, I think that might have been there early in February. Anyway, we're here. It doesn't matter, but you get the idea of the weekly chart will make things naturally longer term. Okay. Let's go to the next day and see we've made our decision. We've gone minus R, and if you didn't want to do it, that's fine with me, because we have other tools that we're going to look at. For example, the short-term trend ribbon. We know that on the way up, the short-term trend ribbon tends to support the price. Why does it do it? I don't know. Wouldn't have a clue. It just does. Okay. So when it doesn't, that gets me a bit concerned, and I might minus R. On that day there, are we annoyed that we took some off the table? Maybe we are. So, I really shouldn't have. There's nothing wrong. The trend was fine. Okay. But did we sell all of our shares? No. We've still got the vast majority of our shares, so we still want CSL to go up. And we're happy. On this day, we're a little bit annoyed, but we're very happy. Hey, we can always add that 100 shares back in. And I would do it with a nice emphatic candle close above what is now a point of supply, a clear point of supply in the market, which is here. We know there's supply in the market. We know it's been active. We know it's there. And if we can close above it, well, it kind of tells us that the supply's gone, and therefore, we can go back to plus R again. We don't get that. In fact, what we do get is another lower peak. And don't worry, this won't take long. We're actually nearly there. Because I think this happens pretty quickly. Well, there you go. I'm just going to get to a candle that probably matters. And that one I think does matter, because notice we've also now taking out another trough. We've got a big gap. Okay, and this actually looks like a half decent candle because it's got that lower shadow, but you need to add this back in. You need to add that gap back in, and you need to make it black, because that's actually what's happened. So when we consider this candle, it's actually got quite a large black body. It is not a positive candle, it is a negative candle, and that in itself might be enough for you to manage your risk. If you wanted to wait another day, and this is how I would personally do it, I would take this and say, I've got two things here. I've got the low of that candle where demand tried to come back in, and I've got my short-term trend ribbon. So why not just give it one more day and see if it closes beneath there? If you wanted to go minus R on that day, that's kind of what we're talking about here. But again, this is not a wholesale get out by any stretch of the imagination. The other thing I'll notice about this day here is the massive, massive range. And you can see that my range takes into account more than just what's happening on this candle, because more than what's happening on this candle is important. My optimized true range, if you use average true range, you're going to get it very close, but my optimized true range, as its name suggests, has tweaked it a little bit and gives me a better indication of what's really happening in the market. Above average volume as well, okay? This is the day here that I think, regardless of whether you did this minus R here or minus R here, this is the day we have no choice now as a trend follower but to take note. And this day is compulsory for me as a minus R. I cannot ignore this anymore. There is absolutely no question in my mind that the supply side is having a much greater influence on CSL's price. I would question whether the demand side is in control in the short term, and I don't think they are, but there's still no doubt that they're in control of long term. It is quite possible we see a pullback to the long-term uptrend from this stage. Okay, so what does that mean? Minus R for me, but this is clearly going to be a bigger number, and for a few reasons. We've got a point of demand we've closed beneath there. We've got a point of demand we've closed beneath there. We've closed beneath the short-term trend ribbon, and it's not a great candle either. So I stack these R's. Now, how many did I say? Maybe there was 3, maybe there was 4. But order of magnitude, what that's going to mean is that 100 before might be, and this is purely hypothetical, it might be another 300. Let's keep it simple, okay? For me, I'm probably going a bit more because I'm shorter term in the way I look at the things. In fact, I think I'm going a bit more. It doesn't matter. Let's just stick with that, because look at that. Next day, we're still glad, and now we're really glad. And this is what I said before about that idea of just knocking a little bit off the table is so critical, because when you don't, ladies and gentlemen, when you don't respond to something which is in your model, that ex post regret can be deadly. By this I mean, let's say we didn't do this one. Now much harder. We've got this regret. Oh, I knew I should have done it. Why didn't I get out at the top there? I should have. Check my profit. I could have made another $3,000 on this trade. What? Look, I'm just going to hold on until it bounces back up to where I know I should have got out. And if it gets to there, then I'll do what I should know. I'll do what I should have done. We all know that feeling, and we all know it never gets back to there. But if we have actually done this, if we've taken that step and followed our model, we go, you know what, I'm not happy that 900 shares that I owned is now losing. Well, it's not making as much profit, but at least I took some action. My mindset is completely different. And half the battle is what's happening up here. I'm more likely now to do what I'm supposed to do, which is follow my model. Now, on this day, this is fine. The question becomes, I still think whatever we've got, we're still equals R on this day here, right? But the question is, do I add risk back on this day? And for me, the answer is no, I can't add risk back here. What I need to see is some of this other stuff happening again. Rising peaks and rising troughs, predominance of white candles. Let's get it back above the short-term uptrend ribbon, just to be sure. So not for me. That day there, some people, you should have bought it yesterday. No, I don't care. It hasn't done what I need it to do. And what can you see? What do you notice about these candles, ladies and gentlemen? What do you notice about the supply that is now lurking in the system up here? The market has gone from buy the dip to sell the rally. Okay, so it can still happen, and boom. I don't have any reason to still be in this trade. That's me personally. Huge gap, bearish candle back below the short-term trend ribbon, beneath this point of supply. And this was a substantial point of supply. This was that last gasp for me. Point of demand, I should say. Let me correct myself. Point of demand, let me put it on the screen. Point of demand, point of supply is up here. This is now a major point of supply. There's some serious supply up and around in this level. We've seen it confirmed once, twice, 3 times. I mean, do you need the ASX to send you a text message to say, hey everyone, the supply-demand environment is now shifting on CSL? Unfortunately, they don't. We've closed beneath this point of demand. For me now, I'm going to go ZRP. I can no longer see any reason for me personally to still have risk on this, because there's a bunch of other trades right now that require what's in my bucket more worthy than CSL. Now, I want to fast forward through, because we're going to see that it bounced. We're going to see that maybe we might have regretted that decision for a little while. Okay, but eventually it started to have a date with the long-term trend ribbon. And we're going to see this point here. I just want to get to the point where we are now quite certain that this long-term trend ribbon has gone from behaving a bit like it did try to be demand, but now with this trough beneath it, it is now behaving as a zone of supply. Now I want to just get to the end of this because everybody's got a bunch of requests and we're in this for a while. And I would say at this point in time, I'm pretty happy with the course of action that I took. And notice that there are no plus R's through here. There's not a single plus R through here. So don't forget also that the vast majority of brokers had buys on CSL all the way down. They were telling us what great value it is, what a great business model it had, its incredible growth prospects. It got back up here, to be fair, and it started to look half decent again. But again, long-term trend never turned up. We never got a really confident series of higher peaks and higher troughs above it. And it wasn't long again until we got this moves here. Look, I would put to you, if you're using my model, if you got out around here, I very much doubt you would have bought CSL all the way back. And did you get the top? And this is the key point here. Did we get the top of the market? Did we sell out at 313? No, we didn't. Once we take all of this into account, maybe we got out at about 300 and some change. And then we never got a single signal to buy this back all this way. And now it's about, it's almost half the price. Which brings us now, Rose, to that's hopefully answered your question, is can you walk through CSL? And I think there was plenty in that case study. Let's just do a quick, what do we do with it now? And ladies and gentlemen, guess what we did at the start? We did checklists. And guess what we're going to do now? We're going to do checklists. The only difference is we knew what was going to happen then. We don't know what's going to happen now. Anything can happen. Could CSL get taken over by, I don't know, whoever's bigger than CSL tomorrow and be trading back at $300 a share? Absolutely could. That is within the realms of possibility. Is that going to happen more often than not on any particular day? I would put to you, no. It's not a more often than not proposition. That's what we want to know. We want to know what's going to happen more often than not. How do I allocate my risk? Am I plus R equals R minus R? And I don't have to take very long. In fact, if we were scanning through a list and going through a list to find stocks that we're looking to add risk to today, we wouldn't spend any time on this at all. We'd see pink and we'd be gone. We wouldn't do anything with the price action. There's no need to. Now, that doesn't mean CSL won't be a buy at some stage, because if it does start to recover, if its fundamentals, if its business and its profitability changes as such that the big brokers who are buying and selling these things change their views and stop supplying like crazy and start demanding like crazy, guess what? That trend ribbon's going to turn green. This trend ribbon's going to turn amber. The price action's going to start to be aggressively rising peaks and rising troughs. We're going to see predominance of demand-side candles, the white ones and the lower pointing shadows. I don't have any of those things, so I can reiterate, no interest in owning it. Last time we talked about it, I was ZRP. I can't see any reason not to be ZRP at this stage. I'm zero risk position. I think I'm still at the point. I don't think I'm equals R. And I know that day I said, well, that's the first time in a very long time. If I really squinted and go check the tape, this is absolutely what I said, maybe I could get to equals R for the first time. And we can see even that wasn't worth it because this was too strong. I'm not even at equals R. It doesn't matter how hard I squint here. I'm still ZRP and minus R. I still think for me and my model is the right thing to do on this one. Okay, let's keep moving. I've got better news, I think, because the next one we're going to do is a happier stock on AAI, which is Alcoa, because we can see, we've talked about this in the past, we've talked about maintaining risk position, we've talked about adding risk in the past. Turns out, and we're looking at it back there, go check the tapes, back in October, we were talking about this as a potential turnaround setup, and that's because it has moved, well, what a great segue from CSL. This is exactly what CSL will need to do before it can become a buy in my books again. It needs to get itself back above that long-term trend ribbon. That long-term trend ribbon needs to at least turn amber. It doesn't have to go green yet because it's going to be a big delay on that. We can see it's only just about to turn green now, and that's taken about 3 months for it to happen. But at least it needs to be amber. But yes, the short-term trend needs to be up. I need to see in the short term, the shorter term money is already getting back in. I need to see rising peaks and rising troughs. I need to see a predominance of demand side candles. And most importantly, I need to see that long-term trend ribbon go from being a zone that is resisting, impeding upward price movement to now supporting it. And that was that day there, right there. So on that day, literally, it now becomes a plus R proposition. And depending on the setup after that, it could also be. I've run this a few times. I feel I ran it on that day. And what I'm talking about when I say I've run it a few times and I feel like I ran it, I'm talking about this here, which is not over there, but here in my ChartWatch ASX scans. So every day of the week, I put in here for you the list of stocks, the full list that qualify for me as plus Rs. If it's on this list, it's plus R. That's it for me. Do not pass go to collect $200 or maybe collect the $200 and plus R on these is probably a better way to put it. And then a subset here, which is a feature chart. Okay, so there's the full list. They're all plus R, but these for me are my higher conviction ones. At the same time, much like CSL, I think we might even find CSL in this list. There we go. Down the bottom, we see our downtrends list. For me, ladies and gentlemen, these are my minus Rs. If I had these, and of course, it's impossible for me to own any of these stocks. But if I had them, I would be minus R on all of them. And then there's a feature list, my highest conviction ones, which I think will see CSL is also on that high conviction minus R list as well. I cannot, ladies and gentlemen, make it any clearer what the intentions of my model are, and I do that for you every day. Now, as I said, AII, if you go check, was probably in on that day. Very likely on that day, very likely on that day. So it is something that progressively been adding risk to. I don't think we need to do anything on this day, which is today, and that's because we don't have a candle that really is a strong signal that we need to do anything about it today. Certainly I can get to equals R because I'm not minus R. If I'm not minus R, I must be equals R. If I'm not plus R, I'm equals R. There's nothing so sinister in these candles. Hopefully we all agree straight away that they're tiny. Yes, there's a bit of supply coming in, but I think it's natural ebb and flow stuff. Certainly not enough to outweigh the evidence that is pointing to the contrary, and that is generally, en masse, there is more demand moving into this than there is supply coming out of it. So I'm a happy equals R on AAI for you, Graham. And Graham has sent me the message to hold or check it out. And I can't tell you what to do, Graham. It's up to you what you do, but I can tell you what my model suggests, which is equals R. Charles has got FMG, which is another one that my model has progressively been moving into. And at this point, I just want to go for my own reference and reminder in my brain as to when it started to move back in. And we can see here around about August. Okay, so what we're seeing here is the ChartWatch ASX scans, exactly the website I just showed you, and a full history, a full and complete history of every time a stock appeared in the watch list as a plus R, or it was additionally a feature. So you can see since August, Fortescue has appeared 21 times, progressively from about 18 and some change up to now 22.45. So that just frames for us, I guess, what the model is thinking about it, and the reason why, obviously, we've got short-term uptrend, long-term uptrend. But we can see early August, around about that candle there, I want to say, what do we say, the 4th or 5th of August from that last spreadsheet. Yeah, so that's when it started to build or add risk to Fortescue. So roughly from there starting to add risk. Bottom line is today, in fact, yesterday it was a feature, this morning it was a feature chart based upon yesterday's candle. So I can say confidently that as early as this morning, I have run this as a plus R. What about today? Well, today isn't finished yet, so ignore it, it doesn't matter. And I should have said that to you before. Today's candle is still live, discounted. A live candle is irrelevant to us. We can only make our decisions based upon closed candles. So in fact, that is where we are on Fortescue. That's all I need to say. Do you really want me to? Do you want me to go into the fundamental analysis of Fortescue, how much iron ore they're digging out of the ground, their current dividend yield and all that stuff? Why? Why would I waste my time on that when like I said, this is a schedule of what the biggest and smartest money in the world is doing on our stocks. Origin Energy from James. Can I go back to here? And this will summarise what I think about Origin Energy. There it is there. Okay, so that's in the downtrends list, which means I am, by definition, therefore, minus R at this present time. And it should become apparent why that's the case. We have short-term downtrend. That's a bit of a giveaway. We've got a long-term trend ribbon that is now amber. It's compressing. We are no longer treating this long-term trend ribbon as a zone of dynamic demand, but now it really does feel increasingly like it's becoming a zone of dynamic supply. We are lower peaks and lower troughs. We are, I would say, a predominance of supply-side candles, although that could be a little bit more convincing. But certainly, I'm not equals R on this anymore. I've moved to a minus R on Origin. Now, that doesn't mean I know where Origin's going next. It could absolutely be trading at $14 in 3 months' time, and that would be the case. And in which case, I would be absolutely wrong. The market would have proved my model wrong. But ideally, more often than not. And I know that more often than not, when I see patterns like this, the price tends to be lower down the track than it tends to be higher. I don't know what's going to happen next, ladies and gentlemen. I really don't. And if you've tuned in to find somebody who does, you're in the wrong place. Okay, let's get to your online request, and I will pick up the pace, I promise. We've still got plenty of today's session to go. If you are watching the recording for the first time, you think these trend ribbons are pretty neat, I'll show you how to get them to use for yourself on in the TradingView platform at the end of this presentation. Okay, Brian was first in today with GHM. Golden Horse Minerals, pretty decent, isn't it, Brian? I don't think we've got too many issues at this point in time, but we are going to become more cautious soon enough, or hopefully not soon enough, but soon enough in terms of price, isn't it? That's probably the best way. Hopefully we don't get down there. Beneath this point of demand, okay, in my conscience, I could not be full risk position. In fact, most likely going to be a zero risk position at that stage, because I do think that the demand side has lost control, unequivocally has lost control beneath that area. Apart from that, let's talk about the good stuff, which is still a short-term uptrend. A long-term uptrend, you can see that's fairly new because the company hasn't been around for that long. We're trend following. It takes time for there to be enough data for that long-term trend to become a thing, to come into existence. We do have potentially lower peaks and lower troughs. I just want to check here, and actually don't. This is all one move because we're obviously we're heading up here. That's no doubt about that. But in this move down, we actually don't head back up. So there's no higher high and higher low because this is an outside candle. This is an inside candle. So this move is just down to here right now, and that last candle's open. So we're still whatever we were before that, which is a little bit mixed. And you can see, yes, there's a bit of indecision in the market. It's not that clear-cut rising peaks and rising troughs. We've got a rising peak, and we don't know where the next trough is yet, do we? We had falling troughs before that. So a little bit mixed there. The candles, I think, are still predominantly demand-side in nature, but only just hanging on. There's still definitely some supply-side interaction from this candle here and a bit in that candle there, but nothing that's really convincing at this stage. We are in the shadow of $1, and $1 will no doubt be a big psychological impediment for this stock. You know, if you got it in the float, you probably paid 40 or 50 cents for it. You would have been dreaming of getting $1, and some people will look to supply into that level. Not everybody, but some will, and that will create potentially some latent supply, which we need to deal with. Today's candle is looking very good, but again, we have to discount it. But let me say, if it closes like that, Brian, or better, so that means it can have a higher close, then it's still consistent with equals R for me. We don't have a lot to go on in the recent past and points of demand. I certainly wouldn't want to see it close beneath a short-term trend ribbon with a strong supply-side candle either. So I'm just giving you pointers on things to look at for your potential minus Rs if you get them, and I hope you don't, because at the moment it still equals R for me. But I've given you some pointers on where it might be minus R. Now, where could it be plus R? And it has the foundations of everything we like to see, doesn't it? It's just lacking a couple of points. Ideally, we see this again. We see a move back into higher peaks and higher troughs. So today's candle holds as a trough. We see a higher high and higher low on tomorrow's candle. That is, tomorrow's candle's high is higher than today's, and tomorrow's low is higher than today's. And that will create a trough here. It'll be a higher trough to that. So we can see that point of demand is holding. We can see that the demand of the system is probably still in the system. We're seeing it reinforcing itself. by having a higher point of demand. If we get beneath that point of demand, it means that demand is almost certainly gone, and that would be a problem. So higher trough, even a nice little high peak would be good. A strong demand side candle. We know there's a bit of supply lurking up here. We can be quite sure of that. There's a bit of supply in this zone, and we really want to deal with them. So if we see, you can see volume has really gone to sleep here. We'd love to see some volume come back in to tell me that there's greater interest from the demand side, high volume, high demand, but high volume, high supply also. But that's okay. Big white candle, high close with that volume tells me that the demand is in control now. They're motivated from the candle. We can tell that. We can tell that from the size of the volume, but also that we are actually dealing with supply up here. So all of those things would push it back to down the track. Let's go question mark, but potentially plus R if we saw some of these happening. It's not there right now. Okay, let's go to Claude, who's got, in light of 2-year, 10-year and 30-year bond yields increasing, do you see this as increasing downward pressure on the old tin pot? Yes, I do, in short. So I'm only going to start counting because this will take 30 seconds because I don't really want to talk about bond yields in today's presentation. We generally talk about those in evening wraps, and I'm at 10 seconds now with 20 seconds to go. But just for everybody who's wondering what the hell Claude is talking about, he's talking about the rise in this particular chart here, which we widely discuss in my evening wraps, and the fact that it is making the price of money more expensive. It is making bonds, risk-free bonds look more attractive, and therefore Australian stocks look less attractive. By making money more expensive, it just increases the opportunity cost of holding Australian shares. So the answer to my question is, if this keeps going up, yes, it will continue to be a dampener on the old tin pot. And if we look in comparison, or did I say 30 seconds? If we look in comparison at the US yields, we can see why the Nasdaq has been able to rally so much better than the old tin pot. Our old tin pot hasn't rallied because we are suffering under the weight of this, and the Nasdaq hasn't had the same impediment. Hopefully, Claude, that answers your question. Let's keep moving to Bruce, who's got Web. Let's have a look at Web, which is starting to look good actually, and I think I put it in on this day here. I won't go back to the spreadsheet, take my word for it. I'm pretty sure I put it in on this day here because it's closed with an emphatic white candle above the long-term trend ribbon. This is a little bit more of an aggressive setup because it hadn't yet formed that telltale pullback and hold, which it actually on this day has, because if I draw that in the price action here, we go up. We're still going up. This is all still up. There's an inside. Was it inside? Yeah, it is inside, so don't worry about that one. We keep going. There's an up. Eventually we get a down. So on this candle here, we've got a down, and then on this candle here, we've got an up. Okay, and that's the up. And in fact, today's candle is still live, but potentially shaping up as a down. We don't know yet, it's still live. But even with it being a down, there's still demand coming into the system. We see that downward pointing shadow. At one stage, this was a full black candle. The only reason why it's not a full black candle is the shadow is telling us that demand is coming back in. For me, candles like today, if it holds, and it must hold like that, or close even better, it tells us that this long-term trend ribbon has gone from behaving as a zone of dynamic supply to starting to be more like a zone of dynamic demand. Now, is it my trend ribbon that makes this happen? Of course not, ladies and gentlemen. My trend ribbon is make-believe. I guarantee the biggest fund managers in the world do not trade based upon my trend ribbon. But somehow the trend ribbon, more often than not, seems to do a really good job at approximating where they like to sell the rally, or in an uptrend buy the dip. Okay? Again, I've said this to you before. I don't know why they work so well. They just do. I don't know how my clutch works. Okay? CVT, what is it? Variable, automatic, something, transition. I don't know how that thing works, but I can still drive down the road. You know what I mean? I don't know how and why the long-term trend ribbon works, but it does its job. So just as a heads up, for me, that's the first plus R, and it's equals R since then. I think, let me go plus R. I think I actually put it in here as a plus R a couple of days ago as well. So happy with that one. I'm not too fussed about today's candle because for me it doesn't exist. Okay. Now I don't know what's going to happen on Webjet next. This is more of a turnaround setup for me. Let me type that out. It's important we understand there are different types of setups within my model. Turn around setup. And I'd really love it if you start to talk to me in these terms. Say, hey Carl, I'm looking at Webjet as a turnaround setup. Okay. Or if we go to something like, just trying to find one off the top of my head that is in an uptrend. What's this one going to be? This one's going to be a continuation. setup. Setup. Okay, so you say, Carl, I'm looking at this stock as a continuation setup, or I'm looking at this stock as a turnaround setup. So definitely Web is more of a turnaround setup. Now, without a doubt, more often than not, these turnaround setups tend to be higher risk because the market is still trying to figure out what they want to do. Those continuation setups, more often than not, the market knows it's a good stock. That's why they're trying to get in, and that's why they don't want to sell it. Here, we've still got some fund managers potentially that are still in that old mindset that Webjet's not good, but we have new fund managers with this new mindset that it is good. Okay, and there's this battle going on. So sometimes the old guys win, the new guys lose, and we're back in that. Remember CSL, back in that downtrend again. So understand when you're taking a turnaround setup, I feel there's a bit more risk involved, but that's why we try and make sure some of these other things are in place, like the short-term uptrend, like a strong motive phase, a big up move and a shallow pullback, holding that long-term trend ribbon. Long-term trend ribbon's changed. In fact, it's starting to move up. So it's got some good stuff about it. It's not completely in the clear. You know, we've got some supply that we can expect to see around here. And this is the nature of turnaround setups. This is why they're also risky, is when you look up, all you see is supply all the way back up. Whereas continuations, generally, there's no supply up there. The market isn't pegged down yet. The market mindset isn't pegged down like that's the price that I have to get out at. They're still thinking it can go to anywhere. The demand side's thinking I'm happy to buy because it could go to here. The supply side's thinking I don't want to sell because it could go to here. But when we get something like Webjet as a turnaround setup, some market participants are saying if it gets back to there, I'm going to sell. Okay, so different setup, but I like to have a mix of setups. And you can see, no doubt we'll find some where we see, like AIR, we look back and 6 months ago, that was a turnaround setup, now it's tripled in price. Would you like to discuss rare earth mineral sector performance? Oh, I can do a rare earth review, why not? It's definitely a hot topic, or at least it was a hot topic because it's gone extremely cold. Let's have a look at, starting with the top, let's go to Lynas. Now look at this. I said to you, might have been that day there, or I don't know, maybe it was this day here. I'd have to check the tapes, whichever one was a Wednesday. We can almost tell. So that's a Monday, that's a Tuesday, that's a Wednesday. There you go. What a great place to start. So that day there, MRP was stands for maintained risk position, so equals R. That day there I said equals R. This is brilliant. Let's go back and look at how good my technical analysis model is. On that day there, ladies and gentlemen, if you tuned in to the webinar, I said that my model thinks this is an equal R proposition. Geez, something wrong with my model, isn't there? If it thinks on that day it's an equals R proposition. Well, there is a problem with my model. It can't see it can't tell the future. It doesn't know that the market is about to completely change its mind about Lynas, that we're going to see the supply side go absolutely wild and the demand side completely evaporate. You can't see it on that day because all you can see is demand side control. But what do we see? Okay, there's a bit of supply coming in. Is that enough to do anything about it? No, I'm still equals R on that day. That day's a bit more of a concern. It is very deceptive, this candle. And the OTR kind of tells the story here. Something big is going on. Okay, something big is happening. Something big is happening in volume as well. And this is all I'm looking for here. Is there something important happening in this candle? Is that red line way above this other red line? Yes, it is. Is this blue line way above the other blue? Well, it's a red line, funnily enough. Yes, it is. Okay, something's going on. I need to take note. I can't just ignore this day. Well, okay, that's what's happened here, but what's happened in the price action? It looks like on the face of it a good candle, but that's if you ignore the fact that there is a big black part of this candle that is not showing on the screen. This is still part of the candle, so this is not a good candle. It's still a supply side candle, but there was demand coming in. Now, why does demand come back in? Well, maybe it was my short-term uptrend ribbon. Why does my short-term uptrend ribbon work so well? Again, ladies and gentlemen, I don't know. It just does. Okay. This day here isn't a minus R day for me. Geez, it's very close. It's very close. If not for that rally off the short-term trend ribbon, if it was another black candle, 100% that's a minus risk day for me. And it would be more than just 100 shares of 1,000 shares because it's a big move. Okay. But no, I'm going to go equals R, and I'm pretty glad I did. I'm going to go, okay, whew, nothing to worry about there. We're all good. Lynas is, the short-term trend is still intact. Hunky-dory. Oh my gosh, what the bloody hell is going on here? And we're literally, if you're using my model, you're tuning in to your stocks at the end of your periodicity. My periodicity is daily. If your periodicity is weekly, you probably didn't see that candle because you're waiting to the end of the week. And that's one of the drawbacks of going longer term. But one of the benefits of going longer term is you won't jump at shadows either. Maybe this is a shadow, but certainly if I'm on a daily chart, I have to jump at this. Now, how many people out there are minus R on that candle? Just on that candle alone. Lots of thumbs ups. Okay. Is anybody plus R? Anybody plus R? Is anybody go, you know what? That's just a pullback. That's just a pullback. Lynas is cheap again. No. Okay. So I don't mind if you equals R. I wouldn't be. I think that's just too disturbing for me. But we can see clearly that I'm getting goosebumps. I've taught you enough to identify that we've got some issues here. And we're not saying that because we know what's going to happen next. We're saying that because we've learnt to follow a model that is pretty clear cut in what it's implying we need to do. So that is a minus R. Now, if we said, I won't do the thumbs up, it's probably too hard to do, but clearly that's not just your standard minus R. Okay, and again, if we had the 1,000 shares of Lynas, you know, I've said this to you before, I like to work in thirds. So for me, it's going to be at least 300 shares of the 1,000, order of magnitude, right? So I've still got 700 shares of Lynas remaining. So, not today though, okay? What we've done now is we've formed a lower peak. Some people might say, Carl, you're crazy, you should have done way more than that. Okay, that's fine. Maybe on the day I might have, okay? I don't know. I'm not there on that day, I can't say, right? It is a nasty candle. This day here, we've got a lower peak. There's a sense of inevitability here. But I can either give it, I've got two choices. I can either give it until the close beneath that, or the fact that we've formed this lower peak, the fact that it is clear cut now, it's unequivocal that we have a point of supply here and a point of supply here, because I've taught you how to do that. So we've got building supply in the market. This is a monster. No comeback on the next day. A little bit of a comeback here. Maybe I'm happy I didn't do anything. Now we've got another point of supply. I'm going to just skip forward candles, and I want to see the thumbs up emojis at the next point that you are unequivocally minus R. Now, you don't have to say ZRP, because I feel what we're going to see pretty soon is ZRP, but it might be the next candle, I don't know, but well, there we go. I nearly said a word there I probably shouldn't have said, but I thought maybe we might get another candle. There we go, the thumbs up emojis like. So unequivocally, we've all decided that in good conscience, there's absolutely no way we could possibly own any more Lynas. There's no reason for this stock to continue to have a place in my risk bucket. We have to move on. Now, the good news is there's other stuff we can trade at the time, can't we? And the rest is history for Lynas. Let's get to where we are right now. I won't ask for show of hands, but some people say, Carl, let me tell you about Lynas, mate. It has got rare earths coming out of its yin-yangs, right? They're digging this stuff up. Carl, did you know they're processing it themselves? They're doing it here in Australia. They're doing it in Malaysia. Man, we're a trusted source of rare earths for old DJ over there in the US. He loves this stuff. He can't get enough. Look, Carl, Lynas is going to go to $130 a share by next week, mate. Let me tell you all about it. And what am I going to say? Say, mate, you're welcome to your opinion, but that's your opinion. It's not being reflected by the price action, by the candles, by the trends. In fact, what they're telling me is that there's excess supply in the market. So for me, I'm still ZRP. I'm not quite minus R yet, but I certainly don't want, so I said I'm not shorting Lynas yet, but I certainly wouldn't want to own anybody. We said we're doing a bit of a run around rare earths. I won't go through the case study here because I think straight away, and this is what I love about my system, is it's so visual. The picture tells 1,000 words. You're already going minus R, aren't you? You've already gone minus R, minus R, minus R, ZRP. Again, I've got goosebumps because if that's you now, I feel like I've given you something really special that you can use until the day you stop investing. ZRP on this one for me. I don't think we're going to get much really happening for us in this space. We're going to ARU, ZRP. And again, ladies and gentlemen, remember my old mate that was telling me about Lynas and how good it's going to be. He could be right. There's absolutely every possibility. It's possible that they go back up from this exact point. And we look back in 6 months' time and go, geez, we were wrong to say ZRP on that day. But I can guarantee that if it's going to go up, we'll see the colours change. We'll see it get, those things will happen. We'll get back on board, don't worry. But in the meantime, it doesn't deserve our attention because I feel more often than not, these charts suggest that they're less likely to go up than they are to go down. What else have I got in this space? I mean, there's stuff like this stuff here, DTR, which has come off, and we won't do the case study, but you can see many, many minus R's there on the screen. LKY, some of these smaller ones, which were very popular at the time, they're all starting to look the same, and that's no coincidence, aren't they? The hot money that got into them is now ebbing out of them in the most painful death by 1,000 cuts fashion. And ladies and gentlemen, I hope nobody listening falls into that category. I mean, we have in the past. We've been that person that has maybe even had it early in the stage, held all the way up thinking, here I go, here I go, here I go. And then at some point, knowing in our heart of hearts we really should get out, and then we don't. And what do? We hold that sucker all the way back down again. No ZRPs and minus Rs for us. It is equal R all the bloody way. Okay, we don't have to do that anymore, but we can see that there are other people, and we should feel sorry for them, that aren't in this webinar right now. Now, let me tell you, if you have friends that are investing, tell them to come to this webinar. Watch the recordings and get this information, because I want everybody to be out of that camp and in this camp. That's still a ZRP. That's why I do what I do, ladies and gentlemen. That is it. Here, MEI, in Meteoric Resources. I think we've hit the main ones. SRL. This one's actually still going up. Sunrise Energy Metals. I think that's more lithium, the camp, isn't it, however? And I'm really grasping at straws now as to remember some of the smaller ones. So maybe we'll just we'll keep moving on from there. Let's go to Atish, who's got great show, Carl. Thank you, Atish. Let's look at SLX. We don't have to go far from that one. We've got some problems, don't we, Atish? It is no longer that clear-cut demand-side market, which it was through here. I think you've all had enough of these case studies, but by this candle, I just point out the candle. By that candle there, we're really struggling. We definitely don't have a full risk position, but really struggling to have any risk, I think, on that day. And I think all the way down here, it's clear. Has it done enough to get us, to drag us back in? Look, it's not bad, but it's not great either. This is the point of supply, which I think is now critical. And if we can get back above that point of supply with a confident, emphatic demand-side candle, white candle, high close, again, we've talked about the importance of volume with that candle to tell us we're clearing out that point of supply, then I could start entertain plus R. In the meantime, could I at least be equals R? Oh, I'm really pushing it here. I'm really pushing it because I'm worried about the growing amount of this, okay? And it also shows how critical this point of demand is as well. Beneath that, I feel it's lights out. It's a bit 50-50. If not for today's candle's still live, I mean, maybe that's what we need to see is a high close today. Let's say that then, a high close today in today's candle, I could get to an equals R. Otherwise, I prefer, I think, to be looking elsewhere at this stage, knowing that it doesn't have to do too much. Like if I was out here at 8.50 and I see a strong signal at 9.50, I'm giving up $1. I'm giving up $1 of potential profit just to get in there with the same position I had here. But what I don't have is the risk of all of this downside. So, I'm taking an option on it in many ways by knowing where I do want to get in, by doing that analysis. Claude's got PLS, which I still think is fine, Claude. I'm going to do these 5 quite quickly. I put a plus R on it as recently as here on that candle there for obvious reasons, holding the short-term uptrend ribbon. We do have a short-term uptrend ribbon. We've got a long-term uptrend ribbon. And I think I'm still equals R. Oh, no, I don't think I am equals R from here, but what I was going to say is I'm not sure if we're adding risk. Maybe look, if today's candle closes strong enough, I think that's where we get some back in. This is a bit of a nothing candle, and today's still live, so we can't do anything, can we? But the reason why I'm saying, well, we're just waiting a little bit is let's see what happens here. Okay, so yes, we've added a bit more risk. Okay, now we just want to see, because we're a bit closer now to this point of supply. Let's just see how we got this point of supply, and really any strong candle close near that supply. And I'll give you a number. Look, give or take, because that high there is 426. So I'm going to say, look, 420 and above, emphatic candle. I don't need to wait for the breakout. We've said that in previous webinars. I don't wait for breakouts. I just want to see a strong candle near the breakout level, and I'm happy to go. Everybody else is waiting for the breakouts. I just need to see that demand is really strong into that zone, because the rest becomes an MOTN proposition. So definitely plus R / equals R on Pilbara. Still pretty happy with that. 4 to go. ECG. Which looks amazing. This one has been in the list many, many times. I want to say it was in on that day, in on that day, in on that day. I'm pretty sure it was in on that day, I'm pretty sure it was in that day, I'm pretty sure it was in on that day. So that kind of tells you what my model thinks about it. It was certainly plus R. And I think for many people, they would look at that TCG and say, oh, well, that's gone up too much. No, next, I've missed that one. And if that's you, I put to you, you are not thinking like the market. Because we know that typically novice traders, right, they go, that's gone up too much, I have to get out. Or that's gone up too much, I can't buy. That's not how the market thinks. The market doesn't care about this concept of price. It cares about value. And if the market is still seeing value, you're going to get a chart that looks like that. Even if they weren't seeing value, we'd see black candles and upwards pointing shadows. They'd be selling. They're not selling. Yes, the price has gone up, but the value is still there. I put to you, okay? The people who have cash and are demanding, they haven't stopped demanding. Big run up, and yet they're still sitting there on the bid side. Look at the volume. There's a whole heap of demand. Yes, there's some supply in the system, but that's because people think, oh, it's gone up so much. So we're clearing out that dead wood. The dead wood that can't see, still see their value here. Demand side is rock solid. Okay, so this is still a very strong setup for me. I'm without a doubt equals R. But even today, if we get a candle near the close today, I'm still plus R, because the market is screaming at you that the demand side is impervious to attack here from the supply side. And what does that tell you about what they think about the value of this stock? Now, could it collapse tomorrow? Of course it could. There's my usual disclaimer. I don't know what's going to happen next. All I do is apply risk based upon the probabilities, and I see what happens. If I'm good at what I do, more often than not, I get it right. Sometimes I get it wrong. Let's go to, what I've got 3 left, TLX. And again, look, don't want to be the bearer of bad news, but sometimes that's the news we need to get, don't we? Short-term downtrend, long-term downtrend. Carl, let me tell you about Telix. Their new treatment for whatever it is, it's going to revolutionise the treatment of whatever it is. They've got something going with the FDA right now that when that gets approved, it's going to be a 10-bagger, mate, from here. You can't believe. Okay, maybe, but that's not what the market thinks right now. The market thinks that, well, part of the market that has shares, they don't really want those shares. How do I know they don't want those shares? Look what they're doing to the share price. They're trying to get the hell out. And there's not as many people that want the shares now as they did before. So the people that are selling, well, there's not a lot of cash out there that's to buy. And my big problem for this one is if it gets beneath that September low, this could fall very quickly. Imagine a ball, and you can see it here, it's so clear cut. Imagine a ball that's bouncing on a tabletop. This trend ribbon is the tabletop, and that ball is hitting the tabletop and it bounces, but each time it bounces a little bit less. It's losing energy, isn't it? It's losing that excess demand. That demand side control is being lost, and supply side gravity is taking over. Until we get to the edge of the table, and there's no table there, what happens to the ball when it misses the edge of the table? It falls quickly, and then it hits another level and it starts bouncing again. Doesn't it, Robert? And I fear the edge of the next table is not that far away for me here, obviously. Isn't it wonderful to know what to do about stuff and not have to worry about, well, geez, if the FDA approves it, if the FDA approves it, it'll probably go up. I get it, and I might not be on it when that occurs. That's life. Equals R. Did I put equals R in there? No, that's big. I meant to do ZRP and minus R on that one. This has been all over my downtrends watch list for minus R. In fact, I put it in here. That's how early I was. I feel I actually put it in a little bit earlier than that, but 100% it went on that day. When some people say, well, Telix looks cheap now. AGL. Don't need to spend too much time on that. It missed it in between. Could I get to an equals R if I really squint on the basis of this? So if I had it, would I hold it? If I had it, I'd be thinking, geez, there's so many other better things. Look at that uptrends list. I've only got so much I can fill my bucket right now, and there's other stuff that looks way better than this. For me, I don't think I can even get to an equals R, but I do acknowledge that the technical picture is substantially improved. The biggest problem for AGL is my long-term trend ribbon, right? Can you imagine the CEO or the chairman getting up at the AGM of AGL shuffling his papers? Ladies and gentlemen, the biggest problem facing AGL at the moment is Carl Capolingua's long-term trend ribbon. Okay, one more to go. Let's go to NXT from Joseph. It'll happen one day. We've got problems here. So this is another one that's recently started appearing, I want to say, on this day here, for obvious reasons. And again, if you listen to me long enough, my commiserations, but if you listen to me long enough, you will start to spot these. Okay, you will just go bang, there it is, minus R, right there. That's where the model says minus R. This day here, let's go fast forward. Massive minus R on this day. I ran it as a feature chart on that day, and then once again here and once again here. So for me, my model can only be ZRP on this or minus R. No other alternative here. But Carl, let me tell you about Nextdc data centers, mate. They are the cutting edge of the AI revolution. Maybe, I don't know. I've done ARU. Let's do CCL. I know this is the sixth one, and I said that would be it, but we'll do one more. Cuscal, we've got some problems. I'd ask for a show of hands, but I don't think anybody listening today is going to be FRP or full risk position on this one. I'm struggling, I think, to get to equals R. We've got some problems here. Okay. On that cheery note, should I end in a cheery note? Let's go to evolution. Maybe this one will be a cheery note. So that's a bonus couple here at the end. This is a cheery note. I knew I was going to get a cheery note on evolution. Happy holder here. I can't see any reason not to be FRP at this stage. I think we said that last time. So this is a really easy one for me where I go equals R plus R. Carl, aren't you worried about? I'll worry about what I need to worry about when I need to worry about it. Okay, I'll worry about it when it starts to do that. Until then, equals R for me. Looks pretty decent. If you were wondering how to get access to my trend ribbons on TradingView, TradingView is the only place that I'm sharing it at the moment. What I need you to do is go to your profile page, copy and paste this, and then fill out the form that is in the description of our video today. Okay, that doesn't make sense if you're listening to me live, but it certainly will make sense if you're listening to me on the recording, because you're watching on YouTube, and down the bottom there's a description and there's a link, a form that you need to fill out. Send me your TradingView username. You have to put your name in because I do get requests. People don't bother to put the name in, and I just delete those requests as a common courtesy. I think you can give me your name if I'm going to give you my trend ribbons. Please don't fill it in 10 times. I haven't got it yet. 5 minutes has elapsed. Let me fill it in again, just so Carl's got my request. Please don't fill it in multiple times. I'll get to your request. I will add it. If you are watching on YouTube, make sure you hit the subscribe button to be notified every time a new recording is put up. That'll be helpful. And hit the thumbs up button to let me know you like what you're hearing, that I'm actually adding some value to your trading and investing. That just makes me feel good about what I do. Apart from that, ladies and gentlemen, it has been an absolute pleasure chatting with you today. Hopefully you enjoyed yourself, you had a good time, but you learned lots along the way. I certainly had a good time in speaking with you. All the best for your trading and investing until we catch up again. Bye-bye for now.